Hey, what's going on, everybody? Welcome to Froggy Stocks. Nothing I say is financial advice, entertainment purposes only. This is it. This is my last AMC video. Now, I haven't been making many videos because I have been thinking. I have been tweeting and whatnot, but I have been thinking for 2 weeks now on what is really going on here. And from a couple of good space calls with Terrible 808, some of the folks that came in that are actual professional financial managers or former fund managers said a few things that we've talked about in the past. But here's what I think is going on 100% completely in a nutshell. No FUD, no conspiracy theory shit, just market mechanic going on with AMC and APE. AMC was short sold beyond any responsible means when this whole thing started back in 2020. They had it up over 36% short interest. The GME play came out 136% short interest. Retail got involved in the market. Everybody went crazy. We FOMO'd into these stocks. The shorts got cornered. They got crushed. The stock went to $72 because of the naked short selling. Adam Aaron did a share offering. The stock went crazy. They needed a way out. The way that you drop a stock's price when you're stuck in a bad short position is you start selling more shares than legally exist issued by the company. If the stock's at $72 and I'm the market maker called, say, for example, I'm not saying they are, but for example, Citadel, and I'm in a bad short position with one of my side companies, my fund company that manages the investment branch. The market maker comes out and says, well, why don't we just sell a bunch of shares that don't exist into the open market since they want to buy it? And by doing that, what happens when you put more shares into a stock, more past what's legally issued, say they do a share offering, normally if the market works right, it would dilute the stock price. But what they're doing is they're selling more shares out into the market than legally exist issued by the company, which is diluting the stock price, but it's not showing on the float. It's not showing on the shares outstanding. What happens is these market makers sell these shares into the market. They're called phantom shares. They take your money and your buying pressure and they push it into the dark pool so it never hits a lit exchange. So you're getting price dilution on the stock price, causing it to go down, which is what we saw on AMC for a long time. And we've even had confirmation from CEO Adam himself that no, we are not going anywhere. From 72, it says 44, but this because of the split. 72 straight down to 9 again. These little pumps here, these are funds that were probably going out of business, got margin called, and had to cover. They had to cover the securities they sold that they didn't own and get out of the play, and that's what those little pumps were from. But there's still many, many market makers that were doing this. This is why we have the billions of share theory. I personally believe there are 2.5 billion AMC shares, which means there is 2 billion AMC shares sold that never existed that are sitting buying pressure in the dark pool, right? This is what happened to APE. Immediately, APE was crushed. Why? Because we are a 1-to-1 with AMC. Let's do a quick comparison with AMC. Look at that. Not much difference, right? AMC dropped because market makers were selling shares that did not exist, that they did not own. That buying pressure from retail goes into the dark pool. The shares go into the market, even though they don't show on the shares outstanding. And then we have the new market price, which is diluted down. And I'm not telling you not to buy. Every single share you buy at this point in time is probably diluting the price down, which is not a bad thing. Your portfolio might look stupid right now, but it's not a bad thing because we have the cure for it, which is the APE share offering. Look what happened on AMC when Adam Aaron sold 45 million shares in that last share offering. We ran like crazy because what happens when you introduce new shares into the market, new legal shares? Immediately, the market makers who are selling shares that don't exist are going to go, I'll buy those, because then they can fulfill the IOU they gave you, take that money out of the dark pool and put it into the new market. Right now, my theory is they got trapped in their short position. They thought selling securities they didn't own would be a good idea because we would probably go away. And then what happened is we stayed and bought more and more and more. And we diluted our price down and down and down, which put their shorts in the money, which they cashed out. We see a little run, then they come back and they want to do it again. It's moral hazard. And or there's many people stuck in the play that just can't get out because there are no shares for sale. They may just be stuck in the play because there's no shares for sale. Can they admit that? No. Why do they keep selling shares that don't exist? Because if you got a message from your broker saying there are no AMC shares available, that would be an admission that the float is completely sold, which supply and demand would take over based on no more buying pressure, and we would see a squeeze because there would only be buying demand, right? It's absolutely crazy to think about. But what happened is Adam Aron did a share offering. Market makers came in, bought it all up, facilitated some of the IOUs they sold, closed some shorts out at the same time, and we ran like crazy. Then we bought ourselves all the way back down to $9. Absolutely, that is what I believe is happening. So what's the cure for this, and why did APE drop like this? APE dropped almost immediately because it's 1-to-1. So for every one share of APE, every one share of AMC, there had to be one APE. So if they've created 2 billion fake AMC shares, they now have to facilitate 2 billion fake APE shares, which they cannot cover because there's only 516.7 million out there, right? So what does Adam Aron do? I'm going to create 5 billion APE that I'm going to sell into the open market from time to time, so institutions can buy them to close out their IOUs out of the dark pool and put this money into the market. This is why Citadel shows long positions on AMC. This is why Susquehanna shows long positions on AMC. This is why Chanos bought APE long and shorted AMC, because he knows the first thing that's going to happen is Adam Aron is going to sell 425 million APE out into the market, and APE is going to run like crazy. He's then going to sell APE, short APE, go long AMC when all that cash flows over to AMC and when we convert APE to AMC. This is how you cover both stocks. I actually wrote it all down. I'm re-explaining it, but here's my breakdown. 1, retail buys AMC. 2, broker fills the order. 3, market maker sells a share that they don't have because there's none available. 4, market maker pushed buy pressure to dark pool until legal shares become available. So they give you the IOU, which dilutes the stock, causing it to go down while they're shorting it, and they put your buy order in the dark pool. That's why retail buy orders are in the dark pool. That's why Gary Gensler isn't shutting it down. If he did, this entire thing would blow up to the $100,000 price targets. They don't want that to happen. They're not going to let it happen. What they are going to allow is this compromise with Adam Aron. 5, broker gives retail the IOU. So you're sitting there thinking you own a real share and you don't. Unless you're DRS, you do not own a real share. 6, price is diluted due to no initial buying pressure from the phantom share being sold. We covered that. Your buying pressure goes to the dark pool. They give you an IOU. The broker says you're good, but you're really not good. They will lie to your brokers. They will lie to anybody buying. Half of the time, people that are naked short don't even know they're naked short. They opened a short position and the market maker said, yeah, sure. And there was no shares borrowed. It's crazy what they're doing. It's the worst type of moral hazard. 7, Adam Aron announces APE on a 1-to-1 split, AMC 1-to-1 APE, right? Now, every one AMC phantom share needs one APE share delivered to its owner. This is why we had the big problem with FTDs and the delayed APE delivery. 9, market makers can now buy APE shares direct from AMC theaters, fulfilling that initial buying pressure. They're going to run to Adam Aron as quick as they can. Say, can we buy 100 million APE at $5, $7, $10, whatever? Can we buy 100 million? Those people who sold AMC shares that they didn't own are going to buy that APE. They're going to fulfill the APE delivery. APE's going to run. Then AMC is going to say, let's convert, and then we vote to convert. And now those institutions have enough APE converted to AMC to cover their AMC sales that they made that they didn't own. Securities sold, not yet purchased. Citadel has over 65 billion of these from the 2021 annual. Barclays just got fined $375 million for selling 18.5 billion securities they didn't own. And now we see USB has been fined a minimal amount, unfortunately, money for failure to deliver. We are correct. This is it. They want you to sell your APE and your AMC right now so that they can buy your shares off the market and fulfill those orders. They need to unwind their leverage. Now, if if half the community decided to sell today, the absolute stock price would go crazy. We would see a run, but not like the run we're going to see when Adam Aron sells APE and they start to cover all those sales they made of stock that they didn't own. 10, market maker can take the original IOU buy out of the dark pool. So now you're going to get a real share and that buying pressure is legally fulfilled, meaning the stock price is going to undilute. 11, now the IOU has been filled with legally issued share. Dark pool buying pressure goes to lit exchange. 12, APE price is undiluted by the new required buy pressure hit lit exchange. 13, institutions have fulfilled their initial APE requirements to retail. 14, institutions come back to buy more APE on the over allotment clause through Citigroup. AMC has created a clause in the contract with Citigroup, Citi Global, to sell over allotments. That means they're going to sell 425 million. And the word over allotment is for if an institution owes, say, 400 million APE themselves, they can come in for a one-time opportunity and buy as many shares as they need. Meaning they can buy another 500 million if they need to out of that 5 billion. Adam Aron made 5 billion APE shares because he knows he is going to need them. 15, they buy billions of APE to convert later to AMC to fulfill the AMC phantom shares created for the past 2 years. That's the game. That's what's going to happen. Market makers, brokers, and institutions have sold more AMC stock than was legally issued. If anybody's naked short, they probably don't even know it at this point in time. So the short interest is probably much higher than we realize. And the number of synthetic phantom shares is the proper terminology for it. Phantom shares that is out there is probably in the billions. That's why the dark pool is completely overloaded with retail orders. There's billions of dollars in the dark pool worth of AMC and APE. Adam Aron is going to sell billions of APE so market makers can cover the APE delivery, cover the APE sales, then convert it into AMC to cover the AMC IOU stored in the dark pool, and we will see it unwind, and we will see amazing price action in the stock. That is what is going on. It's the only logical explanation. We've been proven right time after time. These institutional hedge fund guys are coming into our space calls. We had Citadel's official Twitter account join one of the space calls months ago under their actual official account instead of their ghost account. They come in to listen to us, to watch our mentality, to watch what we're doing and see what we're saying because they need us to sell our shares. Bottom line, when this APE offering hits and the shares are sold, the price is going to skyrocket. That is what's going to happen. I am going to be sitting here watching APE go to the moon. I'm going to take my profits and then I'm going to immediately roll it into AMC as heavy as I can until the conversion date to watch AMC then moon. And the problem is if these market makers and these people think they're going to do it again after we let them out of this potentially infinite short squeeze, they're going to create the worst type of moral hazard the market has ever seen. Adam Aron's going to come back out and do the process all over again. We'll see the price drop. Adam Aron will come out, do the share offering, and we'll make more freaking money. And AMC will have billions of dollars to do whatever he wants. That's why he called APE a currency, because it is. He can sell it to make somebody do something he needs them to do to make the stock price go up. That is the full thesis. That's the only thesis I think that matters anymore. Nothing else besides filing FOIA requests, which I did this morning. I filed a FOIA request, which I posted on Twitter, stating that I am asking the SEC through the FOIA process. I have just submitted a FOIA request through the SEC platform to seek documents on which funds, banks, market makers, or brokers were responsible for generating the 43 million FTDs on August 22nd through August 31st on APE. That's very important to know. We need to know who is doing this because there are damages to be had. People who sold out of their position because the stock price went down in an unfair manner because supply and exchange is broken completely due to them selling an endless supply. And here's a simple example of it. There's a car lot with 50 cars and they want $3,000 for every single, for every car is $3,000. Then there's a car lot across the street that is selling cars they don't own. They say they have 100,000 cars that they can sell at $50, but they don't own them. Everybody's going to go across the street for the promise of a $50 car. And then later on go, I didn't get my $50 car. And then when they come back to buy the cars that are $3,000, they're going to sold half and now the cars are $5,000. The market makers have broken supply and demand on APE and AMC and GameStop by selling securities they don't own, then taking the retail buying pressure, shoving it into the dark pool until they can slowly buy these securities back from people selling that actually own them, people in computer share. There's two outcomes to this. Adam Aaron sells the APE, the market makers get to unwind, they lose a bunch of money, we make a bunch of money, then they get out of it and nobody gets in trouble. Or everybody DRSs their shares and we prove the float is logged and they have to stop selling AMC shares and it squeezes to the moon. But people do not want to DRS. It's absolutely mind-boggling. And all you would really have to do is probably DRS 50% of your position or less. That's it. That's all I wanted to talk about. I don't want to go too far further into the video so it stays condensed. The tweet's up. Read it. Think about it. If somebody keeps selling an endless supply of something that you're buying, it's going to make your purchase devalue. If somebody has a limited supply of something you're buying, then what you own is going to gain in value consistently until it squeezes out people who are trying to bet against what you're doing, the short sellers. And like I said, guys, a lot of people that are short AMC are probably naked short right now and have no freaking clue. And when the haircut comes, it's going to be like getting a haircut from a drug addict with a straight razor and a gambling addiction. That's what's going to happen. You guys have a great day. I'm sticking with it. I'm not leaving. I know exactly what I'm saying. I know in my mind, for my investment strategy, this is correct based on everything I've heard. It will all come out soon. I am going to do one tinfoil hat and guess that when the gold Highcroft mine NFT drops is when the next catalyst will hit, which will be the share offering. The NFT drops seem to be timed with catalysts very well. You guys have a great day. I'm going to go chill. Don't panic. If you see price movement, plan your strategy. Nothing I say is financial advice. Don't lose faith.